Well, good morning, Harmonic Trading Club. All right, good morning, good morning, good morning. We are officially back in the building. This is Wednesday, January 7th, episode number 2 of HTC Morning Lives. It's going to be a very good show. You guys are going to enjoy this one. We're going to start by doing a follow up, kind of catching up on what we started with on Monday, episode 1. And then we're going to break down a couple of more stocks associated with those three markets. Again, if you didn't see episode 1, they were the SPY, QQQ, and Dow Jones DJI. We broke down 6 stocks total, 2 of each. We're going to repeat that format, but 2 different stocks out of each market. Before we do it, I just want to have you guys be reminded that this is not to be construed as financial advice. These are not to be construed as trading signals. As always, consult with a financial advisor of your choice before putting your capital at risk in these very volatile markets. This is for education and entertainment purposes only. All right. So, that being said, again, welcome back. And let's jump right into it. This one shouldn't take us that long because, again, this is a follow up. So I will be providing some guidance, just, not the full teachings that you see that we do in the academy, but explanation where, it's needed or required. So not too much has changed. We're starting with the SPY. These are the same things that I talked about on Monday. Remember, the key focuses are: where are we? 1, 2, is the market structurally sound? And the add-on that I bring to it is the market harmonically sound? Okay, of course, in true Harmonic Trading Club fashion, you're going to see things, you're going to see advanced patterns and things of that sort, harmonic patterns, like you see here on SPY, in terms of how we got where we are. We got to the current set of price action by the bullish reaction of this bullish Garley pattern. I don't have to go into it. Things that I need to re-explain again, I will as we move through the different assets. But structurally and harmonically sound. And when I say that again, I'm meaning things are like out of control and some type of uncontrollable trend in either direction. Not a free fall, not a drop, not a very, very hard correction. Structurally sound, meaning market is moving as intended. Okay. So there's really not too much to talk about as far as the SPY. The reaction that we see, okay, once we filled this Garley pattern, it maybe potentially could take us into extended targets using an A to B is equal to C D pattern. This is the full extension also of this swing low to this swing high. Remember, we do deal with a lot of Fibonacci over here because the market moves according to Fibonacci ratios, your major and minor levels. But this A to B is CD pattern potential completion up here. Remember, it's not a trade signal. That's not me suggesting that we have a $709, $710 target for SPY. This is just so that we can know what's going on, so that other sources outside of what we do here are not swinging you all over the place and whipsawing you and having you thinking that something might be happening when it isn't. Okay, this is so now for you, for your sake and your sanity, you know where the market is. The bullish trend on SPY is still intact. There could be some projected upper targets. We're in the 690s today, 691, 692. And that's why that $700 range is like really right there, okay? So that should take care of the SPY. I don't think I need to say too much about it. Structurally sound, still kind of on the move. Really can't speak too much in terms of the investor confidence unless and investor sentiment unless something really sticks out to me that I need to pay attention to. Otherwise, the structure that I need to see is already there. Okay. Good morning, people in the chat. I haven't even looked at it. 2 people in the building so far. You guys want to make sure that you stay locked in. Schedule's going to be changing. Monday morning stocks, Monday morning stocks, Wednesday morning stocks, Thursday night Forex Live, and that's where the real interaction will take place. Speaking back and forth and things of that sort, answering questions. These right here are not interactive in that fashion for the briefings for the week, okay? But that Thursday night, if you like Forex, you really want to be in there. That one's full interactive. Drop your questions. Tell me what you're trading. We can look at that. I'll drop some stuff in there. We might be able to come up off of some of our like larger macro trades. But the good thing about when I'm on there on those Thursday nights, those trades we're getting close to the end of the week, so those trades are really completing if we do look at macro higher time frames. But if you guys want, when we do get there, we can jump down and look at stuff that might happen in a 15 minute time frame, an hour. I'm not going to do any scalping. None of that 1-2 minute junk is just too fast and too noisy for London. And then the best thing about all this, again, Saturday morning, okay, HTC Live Lab, that's open to the public, that's open for anyone to get the teaching, the learning, instruction. That's for the people. That Saturday HTC Lab is not for me, that's for you. You could pretty much just tune into that for the rest of the year and then pretty much become a harmonic expert the way that I am, or learn structure analysis end to end. So basically, that's my way of teaching everything that I taught through that large 45 class academy daily, not daily, but on each Saturday for you guys. So that's coming up, and hopefully you guys are looking forward to Saturday. But back to where we were. So this kind of gets us up to speed, and I really appreciate that compliment. Really like our trading style. Well, it's not really my style. This is the standard-based system. No one's going to tell you guys this. This is the standard system that the institutions use. So it has a name. The name of this is called structure analysis. So this is not trading style or the Harmonic Trading Club. I learned this from real Wall Street people, and that's being passed down to you. That's why it seems so different and so powerful. This is the way that Wall Street looks at the market. They look at the market in terms of, is it structurally sound? Where's the value at? Do you have harmonic structure? That's the way. No one wants to tell you guys that, though. Oh, so the Monday and Tuesday, those will be 6:30 a.m., just like we started at 6:30 today. I'm sorry, Monday and Wednesday. I'm trying to get myself together because my original plan was to do Monday, Tuesday, and stuff like that would have been way too much. So Monday and Wednesday, 6 a.m. Thursday night, 12:30 a.m. midnight PST, beginning of the London session. You gotta remember that the things that I teach harmonically, they apply to any market. That's why you see me applying these same principles on stocks and on indices. They work everywhere. Doesn't really matter because this is how the market moves. The market moves harmonically and continues to create these harmonic patterns and move in this fashion over and over and over. And no one should be debating that. So we talked about SPY on a catch up, just on a follow up, but I keep running my mouth. And then if you guys remember, I talked about QQQ and Vesco. And then when you're dealing with the QQQ, that's kind of like going to show you the market's risk appetite. Where do they want to go? Are they really going to just be all in on so many things? And so far, when it came to QQQ, their risk was very strong. And it started way back in August, happening with this retest double bottom, higher high, higher close, new structure high. outside return back to the major structure 618, and then completed a 3-bar reversal, which is going to send it to some very, very high extended targets. Could potentially. Remember, I'm not making predictions and projections and targets. We're just talking about what the market looks like. But, you know, when you're doing that, targets are going to be a part of it. So, structurally sound on QQQ. That cipher pattern that field, of course, he was going to have something to say because you're going to expect a reaction, which you saw done. Support here, looking to go and retest the highs in which it came from. And if it can get beyond those, to continue moving. So that will tell you the risk appetite from the stocks that are in QQQ. The last one that we talked about Monday, I talked about how the DJI was basically, since that's only 30, your 30 biggest companies, that's where the money is parked at. And at the time I made the video on Monday, there was just simply a retest and they weren't ready to go yet. There was a 3-bar reversal, and that's why you guys see me keying in on those so often. Fire off and break and close up out of that, so they are off to the races. So now you can see based on DJI where the money is going, okay? Just that index alone says everything in that index, those guys, they are running. So the thing I like to do is I like to show you what's happening. If you notice, this is a very clean chart. There's nothing on this chart, really, typically nothing. There's a couple of lines that I drew. And then just this simple little indicator showing like order block, but that's really it. We got a RSI, of course, but there's not a whole lot of moving averages and stuff all over the place. The market's going to tell you the story, and this is what I teach. And in a lot of cases, it really is about the candles. The other things just come on top just to give you more confirmation. And then if you are trying to make a projection or trying to see what's more probable, that's where your other tools and indicators come in there. Shouldn't be relying on those like they are the end all be all. The candles are the end all be all. That's what's telling the story. So DJI, yes, they kind of paused for a minute. The money paused for a minute. Okay, there was large volume there. I'm going to turn the volume on, and you see what the result of it is. So that tells you those 30 inside of the DJI are off to the races. The money is moving. You see that. I didn't say that. The chart said it. Let's do it like that, right? Is that fair enough? All right. Moving on to our first stock. Remember, we're changing. We're picking 2 more out of the SPY. We're going to start with JP Morgan Chase. Okay. I'm going to back up first. I'm looking at the 4-hour, but I'm going to back up first. Okay. Because remember, the theme is it structurally sound? Yes, structurally sound, still on the move. So what happens in the news and the media is they like to try, every little event means something to them, right? I'm telling you that JP Morgan Chase, especially it being a part of the SPY, which you see is moving, money is moving. And you see it. It's not up for debate. The news will have you that something terrible happened today. It's in a free fall, something like that. Why? Because they get too caught up in what's happening in smaller time frames. So that's where I was. If you notice, I said trend continuation is probable. Now, price action did suck down. The reason I said that is because of what's there. You see what I have written out. Arrow, large engulfing candle. Let's just do it like this. Large engulfing candle, the doji I have circled, and then this would have been the trigger and entry bar for what I would call 3-bar continuation. So not our 3-bar reversal, but 3-bar continuation as its counterpart. Remember, I want to teach on these. I've done all the teaching in the academy. Got to go to the academy to find the deep dives and the real lessons. But this was looking, so my analysis is going to change right here live on screen. When I got up to set everything up earlier, see where this wick is? This wick is the high of it, but it's sucking back down, meaning we don't know if price is going to come back under and not complete 3-bar continuation. So this is kind of pending. Let's put it like that. So at this point, even on a weekly chart, we can't really say for sure what the confidence is in JP Morgan Chase, except that it had a very, very high. Now, when I come closer, and so I come to the 4-hour, now you see that correction. But that's okay, because look what happened. There was conviction this morning, okay, coming from last night's post-market to now. That's what this big engulfing candle is. So this could, in theory, allow this trend to continue, all right? And it was brought to you by, of course, drumroll, a 3-bar reversal. Bearish engulfing candle, doji, trigger an entry, and then you're off to the races. Okay, the target was probably reached already. That's probably what we see here. This distribution is likely natural. Okay, but like again, what I'm saying is, if you were to turn on the news right now and look at any news source, they're going to tell you something like uh, JP Morgan Chase is falling, it's losing so many points, etc. They're not even going to talk about all the points that it gained. That's why you're here with me, so we can clear up all of that stuff. Okay, JP Morgan Chase is fine. You just saw it with your own eyes. This correction should be expected after it reached that high. This is called higher high, higher close, or H3C. Higher high, higher close principle. After reaching that, you're going to see a correction. Positions are going to get closed. People are going to pull money off the table. This is natural. Institutional money, big money. And they're going to wait for the next setup. Second stock inside of the SPY, ExxonMobil. I get to explain through the same logic again. They're going to say, oh my God, oil is falling. I promise you. If you go out there and look on the news, they're going to say, oh my God, oil is falling. Exxon is falling. No. Exxon, this is expected, and this was already set up before anything. Why? The Gartley pattern is one of the most powerful patterns, if not the most powerful pattern in the market. Bar none, full stop, hands down. That's expected. What you're looking at, this reaction here, is expected counter trend trading style after the fill of this Gartley pattern. Okay? That's just what happens. This is expected behavior. Not, oh my God, the sky's falling, oil is dropping. And see, that causes a chain reaction of different things to happen when something natural and expected happens. But it's because of all the noise that you guys hear outside. This is expected, okay? And this will pick up and recover. This is ExxonMobil, okay? So this distribution phase right here is okay after that target, after the fill of that Gartley pattern right there, which is where we're talking about. Fill on the dot. Very, very accurate. Let me ask you a question. Why do you think it just happened to stop right there? Of all the places price action could have stopped. Ask yourself that, okay? Of all the areas that this could have stopped and turned around, why right there? That's the fill of the pattern, 127 extension of the A to B leg. It's expected behavior and then a reaction. This could be a short-term reaction. It don't have to be like this. That doesn't necessarily mean that this is some type of long-term extended free fall. It's just that off this pattern harmonic reaction, you want that to happen. Not only that, I wasn't supposed to be teaching in these things. I got to really clear that up. It's expected because what do you see? The market is consolidating, okay? No, the sky's not falling. It's not like Exxon is dropping or falling to that. That's not it, people, okay? That's why you're here. Because remember, we want to set the stage correctly so that you can know what you're looking at and not be whipsawed and dragged all over the place, okay? Next up, moving on to one of the QQQ stocks, Meta. Okay. Investor confidence, distribution normal. I got it noted here. Expected distribution. This is expected normal. Okay. High retest. This is okay. Okay. Once it got to its highs, 697, couldn't break it. Distribution normal. Down into the most powerful of all, the golden ratio, 618. Reaction takes effect, okay? But they did pause and start going sideways for a second. Expect it. That's okay. While they get ready, this could be accumulation. They could be just accumulating and getting ready to go and retest that 697 again. We don't have the data yet to be seen, but you know that distribution was normal. 3-bar reversal setup, comes up, starts moving back in that direction, off structure here. And yes, it did start moving sideways for last couple of through December and January to start, but it's okay. Nothing really to be too concerned about. If I were to just come in a little bit closer, kind of get close to real time frame, again, no real conviction on anything, nothing to see here, basically. So no one can say, oh, this is happening or that's how. You see how I'm combating that from you guys, because we want to take a look. That's why we'll start off on like weekly charts so we can get the macro to know what's happening, so we can stay relaxed and not all over the place, and then have that fear of missing out on a trade because you think this or that's happening. Nothing's really happening. All right. Second inside of the QQQ. It's going to be the same story. It's going to be Google or Alphabet. Okay. Structurally sound, right? No free fall, no none of that. Structurally sound. Okay. Coming in to retest the high that it had. I could probably drop down to the day for that. I might come down to the day. Okay. Structurally sound. This is perfect. Coming from the high, come and look into retest in there. We see that there's going to be some resistance there. Expected behavior, nothing really to be concerned with. But I will say this, something that I just spotted. Bearish engulfing candle. Let me try to see if I can come a little bit closer for you guys. Okay, bearish engulfing candle. You guys know where we're going with this. Perfect doji. Trigger and entry closing above the doji. And that's what got you your reaction. Now, I will say this. Remember, I don't want to do projections, okay? But based off of that move in that 3 bar, okay? And knowing that there's still a lot of confidence in the market. And this is a QQQ stock. QQQ stock. This is not out of the question. 353 is not out of the question for Google. It's not out of the question. Even if I were to use A to B is equal to CD logic, I wasn't supposed to be doing a lot of markups, people. But you guys can probably tell I can't help it because of how I see the charts, because of the way my eyes work. I'm going to see everything. So got to forgive me. That's what meta looks like. Perfectly expected. Okay. Higher high, higher close. Okay. New structure high. Outside return. Find support. Continue. Trend continuation. Classic trend continuation. Basic stuff. Okay. Basic normal stuff. Okay. So even though it looks like he could play around in this range a little bit, that's okay. The trend is live and activated, but he's got to get past that previous high. Simple enough, right? Moving on to the first of the Dow Jones. Now, this one does get a little bit more technical. For right now, I want you to ignore the big bearish bat harmonic pattern way out there, the decompletion. I want you to ignore this just for right now. But of course, I'm going to see it. So we speak to those things. It'd be disingenuous for me not to know that that is potential target area. But I would have to be able to talk about how price could get there. Not even saying that price is going to get there. Okay. But it's on the table. So I want to start by coming in a little bit closer first. And first, we have to get through this 2618 action, double bottom, break and close, higher high, higher close, outside return, back into the 618 golden ratio, and then trending. But it's not going to be easy to push past this resistance here unless the money is really behind it. Now, we could look at Boeing fundamentally and say, yes, the money is probably behind Boeing, considering how many planes are being sold. They shouldn't have a problem continuing on, recovering and fixing a lot of things that have been going wrong over the last couple of years. But so up close, you're looking at basically trend continuation. And then again, out on the larger macro. I'm not saying that price is going to do it or price wants it, but later on that could come into play. So there's really nothing that this is expected. And again, structurally sound. Look at this. That's structurally sound. No break in either direction. Okay. It's not no free fall anywhere, nothing crazy. It's kind of consolidating inside of that range. If he can break out that range, could be looking to go fill that bat pattern. The good thing again is now you know that nothing's going crazy. There's no, oh my God, you don't have to deal with that. We're taking that stuff off. Okay, that's what we do here. All right. Procter and Gamble. It's a very, very interesting one because this one had a failed harmonic pattern, Garley pattern, and it looks like it's really being tested. There was even a retest in that area right there. And Right now, it looks like this Gartley pattern might be one of the very few to fail, but we don't know. The good thing about it, I will say this, okay, for the price to drop right there for a second. When we come down here at RSI, we do see that it was oversold with bullish divergence. Got to take that into consideration. We're not just going to ignore that because price is coming down there. What I will do is just come in a little bit closer to the 4 hour and see if things look a little bit different. And we're still in this PRZ, potential reversal zone, where you see this extension here, and it's 886. 886 retracement of X to A. We're still in that zone. So we are still in the PRZ, still oversold, but there's just not enough to get Procter and Gamble to pull up. So I can actually remove this one because he's being violated. It's not enough. Not dead yet. It's not saying it failed, but it's in, I would say it's in jeopardy. It's not like extremely holding all the way at this point. But this is the range that it's going to be dealing with right now. This, which is remember, structurally sound. Okay, and the structure here is bearish trend-wise, right? Let's just do this real fast, right? If we looked at this, there is nothing to suggest that that won't stop. The only thing that could stop it, if it was possible, would be this Gartley pattern. Okay? So now you kind of know where we are based off of that. Probably want to keep your eyes on something like a proper Procter & Gamble. If you see a trend like that, that doesn't look like it's completely over, it won't be over unless price action comes and passes the X leg on here and closes beyond that. Then we would really have something to talk about. And by that, what I mean is looking at the price action still coming down. What I mean is like a candle closing beyond this one here. Okay, a candle comes and closes beyond that. Now you're talking about a completely different story, because then that would be the other side, lower low, lower close, or L3C, or new structure low. So no new structure low yet. So this is something that's pending that you could watch and keep your eyes on. Okay, and we do that with every asset that we deal with in the market, no matter the market. Forex, crypto, stocks, it doesn't matter. Metals, gold, silver, platinum, copper, doesn't really matter. So that is our show for today. Hopefully it provided some value. Hopefully you guys enjoyed it. Replay it if you need to, just if you just want to extract the lessons from it. And get ready for Thursday night, 12:30, HTC FX Live. Okay? That being said, share this video if you know someone that it could help. If you want to know more about some of the techniques that I talked about, they are all in the Harmonic Trading Academy. There's 6 or 7 playlists over there, split up by modules from beginning to end. Just have to look through them and see which set of information were you interested in learning more about. That being said, you guys be good. Take care of yourself. And I'll see you Thursday night.